Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with a very special guest. There are very few people on this planet who have done and experienced what this man has done with investments, seeing multiple companies, literally dozens, where seed capital was placed into the company. He's stayed with them for the long term, and he's literally seen companies go from just a few $1 million, $10 million, $20 million to billion-dollar giants. A very rare find, very talented investor, Carlo Civelli, who's really a legend in the resource industry. Carlo, thank you for joining us.
Thank you, sir. It's a pleasure, as always.
Carlo, I wanted to start off with the resource shares in general. It appeared that the precious metal mining stocks had kind of led the way in a bull market, and everyone else seemed to be picking up. And now we've had this this kind of correction since the middle of August. Where are we in the resource shares and for resource investors?
Well, I think as you just mentioned, and if I can refer back to the latest interview of mine, we had just sold out of the gold stocks at that point, sometime in July or so. Mm-hmm. And I think we caught practically the top. You never catch the whole top. And since then, we have not touched any gold mining stocks other than a couple of exploration stocks. But the big ones we're out of and will stay out of. I just don't see gold acting well anymore from here on. But as you said, they led the bull market in mining stocks. And just recently also, of course, the base metal stocks have started to run. Although if I can refer to a tech or so, they have been running since January also and have had a spectacular performance. And that's really based on the fact that we were all expecting the world economy, of course, to improve. China has given some good inputs now, and it looks like copper and zinc and some other base metals have actually broken out. Well, copper just broke out 3 days ago and is up 10% in just the last couple of days. And I guess that's also due to the fact that Trump has made it very clear yesterday in his inauguration speech that he will favor infrastructure investments. And that means iron ore, zinc, copper will be used. And I think we are in the beginning now of a base metal run. In other words, while the gold stocks, in my personal opinion, highly personal, are over for the time being and have had quite a dramatic correction actually since August, I think the base metals are just about to start a new bull market of their own.
You know, I've seen the chart for zinc, and I've been watching the chart for copper in this past few weeks. It does show a clear breakout. With zinc, though, specifically, you and I talked about this in our last interview. There is a situation where there is actual supply deficits. What is going on in the zinc market right now, and where do you see it for 2017?
Well, as we discussed it then, there is still a very big deficit. If you look at all the holdings also on the LME, etc., they are way down from historical numbers. And zinc, in my opinion, has the best appeal or the biggest appeal for a big bull run, even from here on, where it's already up 50 or 60% this year. Whereas copper, for example, only just broke out now, but zinc is a metal that's going to be used, particularly again in infrastructure investments, on the automobiles also. I think it can really have a big run. And this is why we have been concentrating, as I said in the last interview, on zinc stocks in particular. There are only a couple of pure zinc plays, and we're concentrating on that. And I think the deficit will persist at least throughout 2018, it seems.
One of the stocks we cover and one of the stocks that you own and have disclosed on our show was Calnex Mines. And they recently had some drill results come out, very positive. And we even saw about within 7 days, Sprott Asset Management came in to be their single largest shareholder. What are your thoughts on Callinex's drill results and the fact that Sprott has now come into the company to help support them?
Yeah. Well, again, going back to the latest interview, at the time we were very positive, but we didn't have any real data yet. But we were very positive about what we could be finding in the next drill holes. And the stock then had a dramatic rise at the time and then fell back for unexplained reasons. And since then, the company then has actually delivered. I mean, they found a very big and high-grade discovery hole. If you remember the details, it was over 10.3 meters. It was grading something over 13% zinc, which is quite unheard of. And this was done by extending some previous placer dome drill holes that were drilled in the 1990s. They just stopped short of the real ore body. And we believe that right now, obviously we're very encouraged by these results, and it has the potential for a very large, high-grade deposit, which is located within our Pine Ridge concession. And the important thing, of course, which is why we decided on this property 2 years ago, is that it's located just some 10 miles, 15 kilometers away from the Hudson Bay smelter, which, according to latest published results, has only some 4 years left of ore, and after that would have to shut down with tremendous environmental liabilities linked to that. So it would make sense that if a new discovery is made nearby, that Hud Bay would certainly try to make it a deal with us to get the ore. But more importantly, the management has now decided, of course, to do a large 10,000 meter drill program before the winter. We're actually moving a second rig now up to the property. And I think that will really outline then what we believe to be a very big deposit. And if I go back to my experience back in the 1980s, when we were drilling up at Flin Flon, at the time Mike Musilowski, our legendary chairman, said that these things never occur alone. There's usually a cluster of ore bodies. You just have to find them. And which is not very easy, but I think we have the right team to do it. We have the money to do it. And why do we have the money? I come back to what you just said. Sprott Investments has decided to put $5 million into the company at the 50-cent level, which is very, very encouraging. That a legendary company like Sprott also will actually look at this as the beginning of a new mining company or a mining camp up there. And we are very encouraged. And our chief geologist has just recently stated that he's seen several discovery holes, intersections over the years, including at the 777 mine, which was the original or an old mine owned by Callinan when we were involved in that mine. And he says that he's particularly impressed with this one because of where it sits, high-grade nature and the width in particular. So it's real mining width, which leads us to believe that by expanding it now over 300 meters on strike and 300 meters at depth, we could be coming up with a very large ore deposit.
So this could all unfold pretty quickly here. This is not, we'll get to heaven in 2020 or 2019. They're actively drilling, actively exploring, and do you suspect we will see some more results before we go into winter?
Yes, I mean, depending on what you consider to be winter, but I think we are going to have these drill holes down within the next 2 months. And hopefully it won't snow too much before December, but if it doesn't, we should really be having finished the whole drilling program by the end of December, latest January. And so we should have some hopefully, some very good results as early as January.
Well, being from California, the winter to me is the last week of December, I guess. But I spoke to Rick Rule the other day. He said he had very high expectations, and he said, look, my downside is probably 30%. My upside here is 500 to 1,000%. When you get into these type of investments like a Calinex, what are your own personal expectations, Carlo?
Well, I would agree with Rick Rule. We look at 10 baggers at least. Because, this is a highly speculative and very risky market. So when you invest in exploration stocks, you have to invest in a number of them, 3 to 5 at least. Because certainly 2 or 3 of those will not make it. And you lose your money. But at that time, the stock prices are still very low, the market caps are still very low. Whereas you only need to hit one, like a Calinex, that can go up, in my opinion, 10 times, and you make up for all the other stocks that you lost money in. And this has been our performance and our credo over the last 35 years. And we managed to do it.
Well, Carlo, last several times we've been doing some interviews, we've been able to have the chance to talk to you about what's going on in the global economy. You are in Switzerland. You've been an investor who's invested all around the globe. With recent Brexit happening, and now we've had Trump, kind of a U.S. Brexit. I know Italy's going to vote soon. Do you think that we will see the same from other European countries? And do you have you noticed in Europe any real impact on the economy since Brexit?
I would say it's too early to see yet. I still think personally that it is a mistake. The Brexit was a mistake. But again, England has always been on its own in a way. They never joined the EU totally, as you know. They kept their currency. And they believe, or they seem to believe, that they can do it without being aligned with any of the big groups, which they may or they may not. But I don't see any impact yet, but there will be, of course, because certainly with the pound having devalued by more than 10% just recently, everybody who invested in England has taken a hit. And at the same time, their export industry, of course, can now export faster. But the question is, will Europe allow it? In my opinion, they will not. They will certainly erect trade barriers. They will certainly impose a financial tax on anything done in London, in the London market. And so they're going to make it very difficult for the British to make money on this, and also as a deterrent against anybody else trying it. Because the next one would be, as you just mentioned, Italy could be a candidate for a Brexit or an Italian exit. But Italy is in a very much weaker position than England. And so if they exited and went back to their lira, that would go down 50% immediately, whereas their debts in euros would therefore go up 100%. So it's stupid talk when they talk about this. So I don't really see this happening, and actually Europe will now have to get together more than before, just looking at what Trump has been saying. I mean, he wants to basically make America first. He's an isolationist. He's questioning the role of NATO. Well, all of this will drive Europe away from America, and hopefully not, but maybe into the hands of the Russians. And, if you look at the world today with Putin being on an aggressive military expansion, the Chinese are doing the same, and they don't have any populist votes against them, because any populist they can find, they put in jail. And now we have the U.S., where Trump was elected with the invisible silent majority, which nobody reckoned with. and it's a big surprise. But we at this stage nobody knows what he's going to do. All we know is that no soup that is cooked hot gets eaten hot. You always let it cool down. And so he may come around too. His initial speech yesterday was already much different from his campaign rhetoric. And some of the segments of even the worldwide economy are certainly going to profit. I mean, talking about the pharmaceuticals, military, with Lockheed being up 8%, the cement companies in Europe today are up 3%. Construction and real estate companies are going to be up, and of course, the metals companies. Coming back to what we said before about copper and zinc, base metals in general, not so much the precious metals. I can see them having a very, very good couple of years, and that's why copper has just broken out. So I think we're in for a market that is going to be good, but at the same time, I think stock picking or areas picking will become more important. And although you haven't asked me this, I might add that I really do believe that interest rates are going to go up quicker and sharper. And in that respect, we bought a TBF, which is an ETF on short on the treasuries 2 months ago, and it happens to be up 10%. So that shows you that interest rates have been creeping up, although everybody's fixated on the Fed, which hasn't done anything, which is a mistake. And I think that Yellen will have to move.
It's incredible, though, when you look at the debt obligation of the U.S. and the public debt in general. What happens if interest rates go up and the Fed can't control them? Won't that be a massive shock to the system?
I don't really think so. I think it's been priced in my opinion. That's why the treasury bonds are down already. But of course, the long-term rates will go up much more dramatically than what we have seen. At the same time, I think they have to do it in one way or another. This whole negative rate scenario has not worked. The economies in Europe are not improving, and at the same time, some basic things like bank earnings are not there because the banks used to be able to make a spread on lending money. Well, the spreads are now so small that they can't make any money, and at the same time, retirement people that have been living or used to be living off their interest on the money that they had deposited in the banks on bonds, they're not making any money, which of course means that they cannot consume. So I think in the long run, it's much better to have a good environmental interest rate environment, anywhere between 3 and 5%, and it's not going to kill the economy as we have seen in the past, but it will make it come back to normal, whatever that normal is. As you know, I've been advocating that the central banks didn't know what they were doing when they pushed interest rates to zero, and I think they have no clue how to get out of this. Yeah. Not going to be through a reflation or with, they are reflating, but it's not going to be with a transition to a gold standard. I would exclude that categorically. But I think I don't have a clue, and I think they don't have a clue as to how to get out of this.
Well, I love that they call it negative interest rates, because if I borrowed $10,000 from you and paid you back $95,000, I think you'd call a creditor up and put me in default. But for the central banks, it's negative interest rates. Well, Carlo Civelli, you've been very generous with your time. We thank you so much. Really appreciate you sharing your thoughts with us on the resource market, macroeconomy, as well as the recent news from Calinex Mines. Again, thank you so much.
Thank you, sir. It's been a pleasure. Bye-bye.